right, good morning, everybody. Happy post-FOMC. Markets are really kind of shit in the bed at the moment, with the NASDAQ right now down by 1.16% in the pre-market session. And all of this is kind of the aftermath of the FOMC yesterday, where they decided to keep the year-end 2023 rate the same, and they ended up raising their rate estimates for the end of 2024 by about 50 basis points. So what you're seeing right now is a rise in the 10-year Treasury, which gapped up from 4.35, the previous highs, to now way higher at 4.475. And this is close to the highest that we've seen this since 2007. Back in 2007, it was a little bit over 5, and we're kind of reaching up to those levels that we saw back in 07. It's really crazy that you can get 4.5% out of a 10-year Treasury rate, considering the zero interest rates that we had for so long. But the Fed's guidance really is kind of sending interest rates crazy. If you're looking at the 2-year, let's check what that's standing at. We did have some news coming out this morning. Philly Fed is still in the negative 13.5%. So we're still recessionary in manufacturing. Jobless claims came in a little bit better than expected at 1.662 for continuing versus 1.695 expected. And the initial jobless claims came in at 201 versus 225. So jobless claims wasn't as bad. But let's check out the 2-year yield, CNBC, and see how much this gapped up overnight. Currently trading for 5.167, which is about the previous high that we saw back in March. So it's not too big of a jump like we're seeing for the 10-year, which might mean that the 210 yield or the 210 spread could be looking pretty bad. Let's check. Yeah, it's risen about 0.08, which isn't quite what we saw it at before, which was 0.5%, but it's still kind of rising. If you see this rising, this is usually the telltale signs of the upcoming recession. Once you have it inverted, which it's been inverted for a very long time now, and then it goes back to positive. But right now Google's getting hit pretty bad, down at 132.33, still holding on to the 5 puts that I had yesterday. Trading at the bottom of this demand zone, ended up going a little bit under it, 131.85 just now. Housing market crash coming. I don't know if that's on the horizon. First, in order for that to happen, you need unemployment to tick up, and we've seen some unemployment, especially people in the tech industry. There was like 50,000 layoffs last month or something like that, but it's not really enough. There's still kind of ample savings among those consumers to kind of get them through for a little bit. But once those savings run out, once those people are, if they're still unemployed, then the housing market would probably start to come down. Another problem would be, all the institutions that have bought up housing too. That could kind of skew those numbers in the housing market. We went right under 132 on that 15-minute candle for Google. Really hoping for 131 today, but we've already dropped so much. There's a huge gap in the after hours. Let's check on the other names, though. It looks like Apple's actually catching some ground. Tesla. All right, here we go. Google starting the day at 132. Only $1 away from my take profit. 131. Damn. Bloody day. Google just dropped under 133. Obviously, it's at 132. My puts right now are up about 1,000 for the 5 of them that I still own. I really wish that I had held overnight, but didn't want to take that risk of any overnight bounce. Right now, the contracts are trading at 700 apiece. Let's go over to my flexible grid. Pull these bad boys up at 640, 650 apiece. If they drop another dollar, how much delta? I'm sure they have a huge delta at this point because they're so deep in the money. 138 strike price is what I got. Expiring October 6th. Let's see, 138 put has an 80 delta at this point, so that's an extra $400 we would give up if we sold them now. I mean, I'm already up so much on this position. I don't know if it really matters that much. I might just sell them for $650 and cut it. Alright, yeah, that sold at $650 just now. So that was a huge win on me. Let's type that in the trade alerts. Sold the Google 138 puts expiring 10/6 at $650. All right. Yeah, so that position started out as $3,000. I ended up selling 5 at initially 310, 5 at I think 400, and then these last 5 at $650 a piece. So $6,800 after investing $3K. So a nice little 100 and something percent. 3,800 over 3,000. About 125%. Thank you, Keith. That one I was really kind of worried about, but it ended up paying out really big. The reason why I chose Google out of all the big tech names is that it was just trading in this range at the highs for the month for, a good few days. I didn't enter it at exactly the best timing, which would have been yesterday morning right in the open, but I think I opened it this day where it was trading at those highs at 140. Had to sit on it for a couple days. And that's kind of the problem I have with swing trading, is kind of sitting on your hands. Not exactly the most fun compared to day trading, but returns are a lot bigger. Huge gap down overnight too. Wow. Amazon's down 3% today. Huge gap down there too. Amazon was already kind of trading really bad, and now they're at the bottom of the monthly range, so that's actually could be support down at 130.5 or so. There is a gap that it hasn't filled yet though, down at 130.25ish, so there could be a little bit more room for it to come down. Yeah. Amazon really shocking. I mean, really the entire market is pretty shocking. Looks like Netflix is actually doing okay, but Netflix was one of those stocks that just got beaten to hell right before the Fed meeting. It went all the way down to 382, geez, and currently at 390. That one I had a call option for the other day that I ended up busting. I lost like 300 on that. Looks like Google's going back up though. So glad we got out of those calls at 650. There's not that many people that are buying and selling them. Like, I was the only person that ended up selling those 138 puts just now. At $650 a piece, that was me. Volume of 5 that I sold. How's Netflix doing? Yeah, so Netflix is up 1.3%. I mean, if the markets catch any sort of rebound, there's a good chance that it goes back up to at least like 395, 396, possibly up to 400, but you would need a decent reversal of the market to go back up to 4. Apple's kind of treading water, barely in the green right now. That one you could have bought at the bottom of the demand zone and sold at the top for a decent profit. But yeah, it doesn't look like Google's going to get down to 131. Not today, at least. Maybe in the coming days, but decent amount of support at 132 for now. Let's check out how the 10 years trading now that the markets are open. Looks like 4.466, so it's actually pulled down a little bit. Almost went up to that 4.5 level, but couldn't quite match it. So that should be okay for stocks to get a rebound unless it goes back over 4.5. Then markets are really going to be honing in on the bond market now that it's trading higher. So this is definitely something to keep an eye out for. The 10-year treasury rate, probably keep an eye on the dollar. Right now it's trading at 105 for the Dixie, which is a new monthly high. Actually doing pretty well compared to March of this year. Still not quite as high as it used to be in 2022, late 2022. And then the price of oil is still $90 a barrel right now, so high interest rates, high price of oil. Very detrimental to the economy, to say the least. Very early 1980s-esque. Only buy puts. I mean, you can always buy put or calls or puts. I would just set your, especially if you're going to go against the trend, which this morning is obviously bearish. You want to set your stop losses very close. So, for example, on Apple, this ended up starting. Well, I guess it didn't start the market at 173, but say Apple was this price 15 minutes later, 173.75, you would place your entry anywhere between that and open on the candle at 173.86, and then your stop loss will be 173.50, and then try to ride it out to the top of the demand zone, which was 175.75. That's the way that I would have played it. You just have to keep your stops very close. And for me, also, if I'm going against the trend, I'll also put less money down. I'll usually put down about 2/3 of the capital that I would for a trade that's going with the trend. Really shooting myself in the foot for not selling some of my Tesla shares up at $280. Rupert Murdoch is stepping down as chair of Fox News. Wow. He was there for 70 years. Damn. But yeah, looks like the markets are doing okay now with that pullback in the 10-year. The Qs ended up bottoming out at about 360. So my guess, the market makers don't want those 360 puts to pay out. Irritated that the stock fell right after. Yeah, I mean, he's been wrong for many, many years. For me, I see Tesla as a very long-term opportunity, like 5-10 years. Once they can solve the robotaxi issue, but God knows when that's going to be. He's paid by Morgan Stanley. He owns his own firm. Damn, really disappointing that Google didn't go down to 131. It was so close to breaking the bottom of this demand zone. 131.71 was the lowest point that it went. I don't know what the contracts ended up going for, but could have got a little more out of them. Good morning, Jesse. Welcome. So yeah, looks like old pal did not sweet talk the markets too well yesterday. And the 10-year is still treading water above 4.6. Sorry, 4.465. If it was 4.6, the markets would really be taking a dump. Oh, how could he be in business for so long? I don't know. He gets a lot of airtime from CNBC, so he probably gets paid for that, I would imagine. They're always giving that man airtime. Looks like Q's is back in the 360s. If they ended up cracking the 360 level, that could be pretty huge. Let's see how many options you got for the 360 puts. I'm sure they're very popular today. 360 puts volume and open interest is sitting at 35,000 for volume. 6,800 in open interest. If you're looking at nearby calls, there's twice as much volume for the 360 puts. Damn. That is a lot of volume going into those. So either market makers are going to try to make sure that those 360 puts don't get paid out. Or if we do manage to go under 360, it's going to be a fire sale as the market makers scramble to hedge that position. The VIX ought to be doing okay now, I would think. Trading at 16. Not too shabby. Still super low compared to what it used to be, but 5% up for the day. The VVIX ought to be going up, yeah, at 91 now. The volatility of the volatility index. I'd say the C is probably like a 105, 110 handle. Could go short VIX. I really wish I'd held on to those damn Google puts overnight instead of selling them right before close yesterday. I'm glad I kept some at least, though. Looks like Netflix is getting rejected at the bottom on that supply zone, which is at 395.50 resistance. Have I always used Thinkorswim? No, I used to use Robinhood. I ended up making the switch probably 6 weeks ago at this point. The only downside to it is all the fees that you have to pay, but the ease of use of it is just so much better than Robinhood in terms of getting in and out of the trades in a quick manner. With Robinhood, the order process just takes too long. Not only like getting filled on the orders takes a long time, but having that swipe up to submit feature takes an extra like half a second when prices change so damn quickly. Yeah, exactly. It's much more responsive. And that's basically what you're paying for. Actually, I don't know if the fill times on Thinkorswim are any better. I've heard that the fill times for Thinkorswim and Robinhood is about the same. And they have roughly the same bid-ask spreads. So I think what you're really paying for whenever you're trading with TD is just the platform itself and the customizability that comes with it, and I guess the swiftness that you can get in and out of contracts, like having the buy, ask, sell, bid buttons instead of having to manually type all that in on Robinhood. It's way quicker. Yeah. No, I think the fill times are about the same. I think if you want the best broker fills in terms of execution time, in terms of price, your best is going to be E-Trade. But I've used E-Trade and the user interface is god awful. Like, the user interface will slow you down enough to where the fills don't fucking matter. Yeah, exactly. It's much easier to queue up your orders on Thinkorswim than any other platform, from what I've seen at least. I mean, I think that what's it called is pretty similar. Tasty Trades, because I think the developer was actually one of Thinkorswim's developers, so they're very similar in terms of customizability. The fees are only $1 enter and exit versus $1.30 for TD. Looks like those Google puts just went back up to where we sold. Qs just fell under 360, so you could have pretty decent sell-off starting here if we can get definitively under 360. Yeah, exactly. I'm a very high frequency trader, so Thinkorswim is keen versus Robinhood. It just takes so long. Like, I would say that Robinhood would be okay if you're a swing trader and you're not looking for the best prices. Thinkorswim is the best in terms of being able to get in and out of trades with ease and timing. I just wish I didn't have to pay $1.30 a contract. Yeah. Best thing you can do is just stop losses, which is one of the features that Robinhood really lacks, is a proper kind of stop loss. You have stop limits, but then you have to decide on what you're going to exit at if you're profitable. And for me, whenever I'm trading it, my take profit is usually much further away to where it's hard to calculate what the take profit would be on the contract. Because, I mean, if you're aiming $5 away from where the stock is at, you don't only have to deal with delta, you have to deal with gamma and the expansion that delta is going to see. So, stop losses, yeah. Stop losses, I would say, have been one of the saving graces to my strategy recently. And, you know, I do get stopped out more often than not, which hits the ego, but the wins are usually enough to offset a few losses. That Google put was enough to offset probably like 10 losses. I would like to get into swing trading, but the overnight sessions are just too lucrative for me, I feel like. At least to be putting up the amount that I put for Google, which was 3,000. Yeah, Amazon's down 3.5% now. Wow. Bloody day. Tesla's down 3. Nvidia's down 2. We're almost at 400 for Nvidia. We're getting so close. The bubble's gotta pop somehow. Or sometime. Let's check the 10-year. So the 10-year is back up to the high at 4.449. If if you see this over 4.5, yeah, markets are gonna keep on coming down, especially with Qs under 360. It's not looking like a good day for QQQ. Potential fire sale on NVIDIA. Now, QQQ is where the fire sale should start. Considering it's under 360, there's so many puts at that level. 50,000 puts. There's nowhere near that amount of calls. The closest you have is the 361 strike price with half the volume. So everybody is taking puts today. Yeah. But with NVIDIA, if that falls under 400, that could be pretty big too. There's actually not that many 400 puts for this week at least, which I'd say that's kind of reasonable considering that it's still 3% away from the 400 mark. But lots of 410 puts getting bought, 23,000 on that. And just like the Qs, there's not many call buyers today. Everybody is just terrified of the market, I guess. Yeah, chat is for everybody. No, it's only for Keith. Keith is the only person that can talk. Let's see what my UVixie is doing. Not much of anything. It's trading at 15.30. UVixie up from, damn, $13 yesterday. Wow. It's basically just tracking the VIX price at this point. That's interesting. Well, not exactly, but close to. It's about $1 difference. Are we going to get a dead cat bounce or a reversal? It really depends on what we see from the 10-year. I don't think... Yeah, it's possible that the 10-year goes over 4 or 5 today, but my guess is we're going to get something like we did after the Fed meeting, or during the Fed meeting, where it just kind of traded flat. But if you do get a breakout and you do see 4 or 5 for the 10-year, the markets are going to keep going down. That's what I would keep an eye on, the 10-year Treasury rate. That's what everybody's paying attention to now that interest rates are at a new high. And that comes and goes. Like whenever interest rates were, back at around 4%, hovering around 4%, the markets didn't give a shit about the interest rates, and that's why you saw them just keep going up. But now that interest rates are at new highs, the markets are going to be hyper focused on it. Every time that the interest rates are trading at highs, markets only pay attention to that, basically. Yeah. Google, man, that was a good trade. Just wish we had held more for longer and got a bigger payout out of it. We bought those at $210 originally, and we sold those last ones at $650. So that was a triple in return for the last ones that we sold. Yeah, that's what I would be focused on in the coming weeks, months, depending on how long these high interest rates last. So if you see the 10-year continuing to trade over 4.4 or like 4.37, then you're going to see equities continuing to just react to the 10-year treasury rate. As long as they're holding those highs. Google's going up, or the puts are going up a bit more. They're at 670 now. Google's down at 131.78. I think that's the previous low from this morning. So, testing it right now. It's probably a goner if it goes underneath, and probably going to see that 131 mark, the next demand zone. There's actually decent amount of trading in that area from just one day back on August 28th. So there might be some demand between here and there, but I think 131 is definitely possible today or tomorrow. Amazon's looking terrible. Yeah. I don't see any opportunity in it right now. It's trading at monthly lows. Yeah, you could actually take maybe a long opportunity with a stop at like 130.5. Your take profit, I would probably set it like 132 based on the resistance back here. 131.50 to 132. So you're getting a decent risk reward out of that. And that's it, where it ended up topping this morning. Out just a little bit over 132. Yeah, I think that could be a decent idea as long as you have your stop at 130.5. Or maybe just like a smidge lower in case they try to stop people out at that round number. Because this is a monthly low on Amazon. It is looks like the worst performing stock of the big tech names at the moment in terms of the last month of trading. Actually, Nvidia. Nvidia is worse. Microsoft is worse. Apple's kind of trading similar to it. And Netflix is worse. Goddamn. These Google puts going for $675 now. An extra $100 we would have got out of it. Not too much. Looks like Tesla might be improving, actually. Yeah, Tesla has some support. Let me extend this to October. Tesla has some support in this area right here. Stop loss is pretty far away, so it might not be the best opportunity in terms of risk reward, but got a decent rebound going right now. $2 rebound. I probably wouldn't want to take that trade until it's over the demand zone and then set the stop for a little bit lower. Yeah, it was trading in that range for quite a while too. You had 1, 2, 3 trading days it was in that, 4 trading days that it was trading in that range. So it's decent support. Right now though, I don't know if it's the best opportunity just because it has like $4 it could fall. I think, I don't know, let's see. I really don't remember that. The only news I remember recently for Tesla was negative, where they ended up cutting the prices on the S and the X, and that ended up sending their stock down a shit ton. Let's see, I think it was on, you're talking about the 9/11 jump, I'm guessing. What was it, 9/11 and 9/12? No, 9/8 to 9/11. News doesn't go that far back. Yeah, I'm not sure what caused that overnight jump, but still kind of trading range bound, I would say here. It is kind of outside of the range that it's set after that, so you could have maybe a swing opportunity to the downside and see if it'll test the new range at 244 or so. And I would want my stop probably a little over where it's trading at like 260. So you risk about $3 of upside for about $10 of downside. Oh, they started refreshing and started selling it in Australia, but not here in the US yet. I feel like the Australian market's just not as big as the US, but yeah, I don't think I'll take any more trades today. That'll probably be it for me. Just that Google. I'll keep an eye on the Qs at the 360 level. Looks like we just went above it right now. So if the people didn't sell those puts when I was trading at 359.17, I'm probably back to break even on those. But yeah, like I said, I would be paying attention to the 10-year trading at those new highs. See if it breaks 4.5. If it does, markets are going to keep on coming down. But if it just kind of maintains that range, my guess QQQ will maintain a range. And if it does end up coming down to, I don't know, the lows for today at 4.465 or something like that, then you might actually have a rebound for the market. Again, markets are going to be hyper-focused on interest rates, so I'd keep track of the 10-year and keep track of the 2-year. And see how those move around and how that impacts the market. But yeah, that's it for me, and I'll catch y'all tomorrow at 9:30. See you, everybody.